Assist you sell way smarter.
Hello everybody, welcome back to another quick Reno Sparks real estate market update, this time for August 2022. We're starting to see prices fall a bit. Inventory is rising. What does all of this mean for the market going forward? Well, we're going to cover that and a whole lot more here in just a few moments. Before we do, I want to let you know this is for the Reno Sparks metro area only. Does not include Fernley, Fallon, Minden, Gardnerville, Carson City, Dayton, and surrounding communities. If you happen to live in those communities and want more information on the market locally, we'd be happy to get that to you. Visit our website over here, forrenohomes.com. You'll see our phone number there, email address. You can text us or just drop a comment below and we'd be happy to get you market information in your neighborhood. So let's dive right into the Reno Sparks real estate market. And the first thing we always watch is interest rates. Now, obviously, interest rates aren't specific to Reno Sparks. They're national, but interest rates have a huge effect on prices. Why? Well, over 80% of homes sold still have a mortgage on them. I know a lot of people think there's a lot of cash flowing in here from California and other places, people buying investment properties and so on, and there is a lot of that happening, but the vast majority of homeowners and people purchasing homes still need to get a mortgage. So interest rates, again, do matter. We saw interest rates peak out about a couple months ago, really, at about 6%, just shy of 6%, which is significantly higher than earlier in the year, really late to 2021 into early 2022, where you're seeing interest rates right around 3, maybe slightly over 3. So nearly doubling. That is going to affect real estate prices, which we're starting to see now. We set a record last month at 615,000. Excuse me, it wasn't last month. It was actually back in May at 615,000. Last month it dropped to 600,000, and today, as of the end of July, we sit at 574,510 as a median home price. So we're down 4.2% from last month, but we're still up 9.4% from this time last year. And just to clarify, when you see prior period, that's the previous month. These numbers are through the end of July. The previous period would be June of 2022. Now, from the same period, year over year would be from July of 2021. So that's what you'll see on these charts going forward. Now let's take a look at new listings. Now these are the number of listings that came on the market. Now it doesn't matter if they sold or they're still on the market or whatever. These are the number of new listings that have entered the marketplace. And you're seeing actually down 7.9% from this time last year at 746. We're sitting at 687, which is down 20% from last month where we saw 866. Now, not at all uncommon. And as I mentioned last month, if you watch the video, July tends to be a fairly slow month in real estate here in Reno. Always has been. It doesn't matter what the market's doing. Market's hot, market's slow. July tends to be pretty slow. So not a surprise to see a pullback in the number of listings, and it's actually really at normal levels. If you look back to 2012, 13, 14, and so on, you can see we normally peak out at around 750 listings or so, a little bit more, a little bit less, but that's where we peaked out. We actually peaked out at a little bit more than that at about 850, actually 866 from last month. So a little bit higher peak than we would normally see, but again, we're seeing the normal pullback in July. Now let's look at new listings by price. Again, not a whole lot of surprises here. Most of your bulk of your inventory is coming on the market between 4 and say 750 in this range is where the majority of listings are coming on the market. Now let's look at active listings. This is where things get real interesting. Right now we're looking at 1,348 active listings, which is up 9.1% from last month where it was 1,235. But up a whopping 157% from this time last year. Now, a lot of people look at this number and say, wow, I mean, inventory is going crazy, prices are softening, what's happening? Well, I want you to notice what we considered somewhat normal back here, going all the way back to 2012, 13, 14. The number of active inventory usually is right around, 1,000, 1,100, up to about 1,400 and tends to fluctuate back and forth. What we saw here back in 2020, 2021, and really early 2022 was record lows in inventory. So what we're really seeing is a snap back to normal. We're not overshooting. Now, if inventory rises up here, we're going to keep a close eye on it. But if inventory gets up to 16, 18, 2,000, that's when you start to get a little concerned because it's going to be way too much inventory. But really, all we've done is snap back to a more normalized market. Now, if we look at active inventory by price, again, very similar to picture to what we saw in new listings by price. we're seeing active by price. Now let's look at the closed sale. These are the number of houses that actually sold, and this is again where it starts to get interesting. Now it's not a surprise to see numbers drop in July. As I mentioned before, July tends to be a fairly slow month, but what we're seeing here is this is the chart that goes back again to 2012, and normally what you see is a fall off early, December, January, February, and then you see a peak out usually around May, June, before you start to see it pull back and cycle back down to winter months in terms of number of sales that take place. And you kind of see it go up and down, up and down. I call it the EKG of the market. What concerns me a bit here is if you look, we kind of peaked out and we dropped off, which again is normal, but our peak was much lower than it would normally be at 600 or 700. So in July, we had 425 closed sales. It's down 7% plus from last month, but down 34% from 2021. Let's see closed by price range, and you can see again most of the closings are taking place between 400 and 750, and much fewer when you get in the higher end price range. Now here's an interesting stat that we want to keep an eye on. Now these are unsold listings. What this means is homes that wound up expiring or withdrawn. People took them off the market or they expired, they just never sold. And again, normally you would see this normal be around between 100 and 140 range, and kind of fluctuates back and forth depending on the time of year. Again, we had a very low number of unsold listings. Pretty much everything was selling 6 months to a year ago. What we're seeing is a huge spike in unsold houses, which means homes are sitting there, they're not selling, and people are either pulling off the market or they're expiring. But to be fair, we're not really overshooting unsold inventory. If we're hitting 180, 200 and above, then I'd be very concerned. But we're actually just snapping back to normal. Now let's look at month's supply of inventory. Let's start looking at the 300 and up. So if you look at 300, we're right at 3 months for 3 to 400. 4 to 5, we're just around 2 months. From 5 to 6, we're approaching 3, not quote, probably about 2.7. We're right at 3 months for 6 to 750. But as you start rising into the 750 to a million, a million and a half, and a million and a half plus, we're already well into what would be considered a bit of a buyer's market, meaning there's a lot of inventory for sale out there and very few homes selling. What we're seeing here is still a very strong market. We're seeing a snap back to a more normal market. Now that we're hitting those normal market ranges, we're seeing interest rates start to soften a bit. It doesn't mean the end is near. Interest rates are still very good at 5%. And if you shop around and you look, there's a lot of mortgage companies out there that are offering like 10-year ARMs at 4%, 4.25%. You can still get really great value in interest rates, and you have more to choose from if you're buying. Go out there, look around, you can shop a little bit and find the home you really want. So that's it for another Reno Sparks Real Estate Market Update. If you have any questions, visit our website at forrenohomes.com. And just a reminder, there's no reason to pay a huge real estate commission when selling your home. Obviously, the market's softened up. You need to get aggressive if you can on pricing. Assist to Sell allows you to do just that by putting more of your hard-earned equity and money in your pocket by charging only 1% to list your home. We've sold literally thousands upon thousands of homes in and around the Reno Sparks area since 1987. We love the opportunity to sell your home as well. Again, forrenohomes.com. Sell your home for only 1%. 688-6060. Info at forrenohomes.com. Thanks for tuning in. We appreciate it. We'll see you next month. Have a great day, everybody. Bye-bye.
Assist to Sell, way smarter.